Sticking with results, Truworths has posted lower first half earnings due to a drop in sales and decline in the gross profit margin at Truworths Africa. For greater insight on the performance, Truworths CEO Micheal Mark joins us now. Thank you so much for your time, Micheal. In terms of your sales picture, there is a divergence in growth between your Africa operations and the UK. So let's actually start off with Truworths Africa. What have been the biggest headwinds there?
You know, we sort of are facing a reality in South Africa. Our economic growth is less than 1%.
Yeah.
The country has got challenges. People have got credit problems. They are in debt, unemployment, etc. You know the story. So it's always a difficulty, and we have been very cautious with credit in the last 6 to 9 months because we've been a little concerned about people's debt levels.
Yes.
So we were disappointed. This last summer season was definitely lower than we would have liked. But it was sort of across the board. All departments, all of them really battled. It was a tough period from a customer point of view. They stretched. They did get the two-pot sort of payment in October, etc. But still, I think people used that to pay off some of their debt. So Truworths had a tough time, but the green shoots are that the credit book is definitely looking healthier, which is a good thing. And you know, our business, as I think you know well, is that 70% of our sales in Truworths Africa is on credit to our own in card. So when that credit book looks good, it augurs well for the next 12 to 18 months. So we, interestingly enough, are imagining a future in the next 12 to 18 months where the economy improves from the 0 to maybe hopefully 1.5%, 2%, where the credit book is looking healthier, and where our merchandise and innovation, there are lots going on in our business to make our business thrive in better times. So we've got quite an optimistic view of Truworths Africa for the next 12 to 18 months.
Let's actually drill into credit. Of course, you mentioned that the bulk of your sales is derived from credit sales, and Truworths really is known as one of the companies that have throughout the years known how to navigate that credit cycle and the cyclicality of it. And I'm just wondering, I mean, you say you've been cautious for the last while, and now with, I guess, more positive business sentiment and consumer sentiment coming through, have you maybe started being less, I don't know if I should say less cautious, but maybe opening the taps a little bit more in terms of giving out of credit sales, rather?
Well, that's a question, because that's the difficulty of playing that game. What do? How much you open it, or the reverse? We took a view that let's be cautious. It's not that we were conservative with credit. Over the years, we've been quite aggressive. So we took a view that let's, in anticipation of improving economic cycle in the next 2, 3, and 4 years, let's make sure our book is clean, well looked after. So we separated a book into a charged-off book and to a regular book. And we've got much more intensity about how we manage the book, and we were careful. We took a view, rather move away from the higher risk areas and focus on the lower risk areas, so that, as you rightly say, when things do take off, it's not so much opening up the tap. We'll have a clean book with customers who are not in debt and who are able to shop, and as the economy improves, they will be able to shop easier and better. So our philosophy was more that way than the way you were just asking me.
And I'm wondering, I mean, just also to respond to a more constrained consumer, how much room has there been for promotional activity in Truworths Africa?
Well, again, it's not so much how much room. You know, when we plan our sales, we've got a funny way of doing it. We say when we're planning expenses, because that's how you saw our expense management is very good. So we say, when we plan expenses, we plan very low sales. That's for budget. But when we're buying a merchandise, we're extremely aggressive. So now you've got two sort of balls in the air. One is we control expense, but when sales are as poor as they were this last 6 months, and we've been aggressive with our merchandise, you have to have more promotional activity. It's not a choice. You can manage it up to a point, but it does result in more promotional activity, especially in the high season, October, November, December, January, February, where our markdown activity and promotional activity was much more aggressive than we've ever had to do, in order to make sure, just like we want to have a clean book where the customers are not in debt and it's healthy, we also have to have that with our merchandise. Clean stock, not overstocked, start a season with new fresh stock. So we think like that, and we achieved that, but it came at a cost.
Yeah. Well, let's cross over to the UK, and quite interestingly, even though the UK does have its own headwinds in its own economy, we have Office UK actually performing pretty well. What has characterized that positive momentum there?
Yeah, that business is, as you saw, it's flying. You know, it's getting to 40% of group profits over the next while. It generates tons of cash. You saw our group cash generation was well over $1 billion. We have got excess cash now. We've built a new DC out of our own cash resources, and we finished buying that. So and yet we've got this office business generating cash, making the highest margins you could imagine, and with tons of runway. So Office UK is a real win. And I would say, if you ask me the question, what is the trick? I would say we applied our Truworths philosophies and principles over a steady, long period of time to Office, and it steadily started to work better and better until it got on a roll. And the last 2 years, it's just been on a roll with lots of upside and opportunity. That business is a very, very exciting one. And of course, it's offshore, so it's a first world currency, and it gives us the hedging protection that investors are looking for.
Well, we do have to wrap up the conversation there, Micheal. Thank you so much for your time and giving us your insights into the numbers that came out of Truworths. And of course, we will be chatting to you in the second half of the financial year. That was Micheal Mark, CEO for Truworths.